What do you think is driving this change in sentiment? Because rates are not moving the other way.
Yeah, they're not moving the other way. And it's interesting because rates backed up and yet tech rallied. And I think part of it is because you've seen a significant reset in bond valuations and also a significant reset in tech stock valuations. So if you look at the bond market, the long-term treasury performance year to date is down 11%. We've just had a worst quarter so far of returns in the bond market going back to 1986. So I think as a result, there's been a lot of hawkishness from the Fed that's been priced in already. I mean, the markets are now assuming the Fed is going to get back to neutral by the end of the year. And I think that's probably about right. I think that's what the Fed is ultimately trying to accomplish. And then I'll tell you that there's been some whispers about maybe the second derivative of inflation also slowing down here. In case in point, oil was down 7% on the day yesterday, and there's other factors that we look at. So I think a lot of hawkishness priced in, maybe inflation second derivative is slowing down. And then you look at tech valuations. If you look at some of the software names, their valuation has been cut in half from 20 times EV to EBITDA to 10 over the last several months. If you look at big tech, mega cap tech, their valuations are back to 2019 lows. So I think you put those two things together. And, oh, by the way, we're probably in the best 30-day rolling period for seasonal returns. And I think that's what's giving the investors the confidence to step in here. What I'll tell you, Andrew, I think it's a trade. It's a tactical rebound. I wouldn't get too comfortable staying in this trade. But I think for now, you stick with this momentum.
Oh, you just said something important, though. You said you wouldn't feel too comfortable staying in this trade. So what do you mean by that?
Well, you know, it's nice that we're bouncing off these low levels on these technical factors. But if you take a step back and if you look at the yield curve, if you look at consumer confidence, if you look at where the economy is headed, I don't think it's to a particularly strong place. And I do think that if you look at one-year recession probabilities, they're rising. You know, you don't pencil in recession when you have an unemployment rate at 7.5%. You start to think about what comes next when you have the unemployment rate at 3.5%. You know, if you look at consumer confidence, it's at a 10-year low. If you look at real wage growth, it is actually negative right now. So you put those things together and you can't just get very comfortable with the economic outlook. So I do think we have to allow for the probability of recession to go higher. We have to allow for these periodic growth scares that we're going to likely have throughout the course of the year.
At what point do you then sell out of these tech stocks that you've just bought in this mini rally of sorts?
Look, I think we have a window of opportunity here. You know, I do think that the next few weeks and maybe it's the next 30 days, it ends up being a pretty good, seasonal period. And also we're heading into the earnings season. And the expectations for earnings have already been reset lower. We've had the highest number of negative pre-announcements. So I do think the bar has been reset lower. So maybe the earnings season actually ends up being positive for stocks. And I think one place where investors are going to have conviction about earnings is likely to be in tech. So I think the next 30 days could still be a nice time for these tech stocks. But what I would do here is I would think about layering in hedges. You don't want to leave the market too early. You don't want to leave the party too early. And
so
by the way, well, just real quick. And by the way, the markets don't peak until much closer to recession. So I think you think about layering some hedges. You know, maybe it's through options. Maybe you actually go out and think about buying the long duration treasury that has been sold off so hard. So you start inching into some hedges incrementally.